All right, so in this video, I want to explain a thing with mobile home park financials that I feel like a lot of investors are getting wrong, and that the most aggressive buyers in the space right now are able to look at, assess, and execute properly, rather than a lot of new buyers in the space who obsess over lot rents. Lot rents and lot rent only income, which yes, banks typically will only finance lot rent income. What they don't realize is if there's park owned homes there, if there's a huge disparity between market lot rents and what the park owned homes are charging. A lot of times they could just be swapped over into lot rents day one, and the tenants are actually paying the same, if not less, in income, but you're effectively raising the rents all the way to market day one. So let me explain to you guys what I'm talking about. All right, I have this property that I recently, we're under contract now with a big operator in North Carolina, and I do expect this to fully close. But I want to talk about something with the financials here, just to show you guys what this looks like. Silver Oak is the one that I am particularly referring to. But long story short, 26 total sites, 12 tenant-owned homes, 14 park-owned homes. The lot renters there are charging $250 a month. And then the home rents is $336 on top of that. So about roughly around $600 a month. Let me do like a better breakdown on this so you guys can see what I'm talking about. So, I have these combined in the package. Anyways, my point we'll go through. So we have 26 total park-owned homes, or 36 total park-owned homes. And a big pushback I got on this property, and this was all from less experienced buyers than the most experienced buyers right now. And I'm doing this video just to kind of give a little insight. I'm just a broker, and I'm telling you what I'm seeing out there in the market because I'm constantly transacting, which a lot of you guys out there are not. So this is good market data so you understand how the best buyers are starting to look at these deals. Now, whether they have advanced or not advanced, but favorable lending terms, or their lenders willing to work with them a little bit, yes, that is part of the factor. But when you look at this deal, you're looking at $250 a month lot rents, which obviously this park is not going to finance anywhere near $1.8 million. So if we just go off the lot rents on this, right? We are at 147K. We gotta go to combined. That's what I mean to do. We are at, if we just go off the lot rents right here, we're at 97,000 net income. Divided by 1.8 million. Obviously, that is not going to work. A 5.43 cap, no one is buying in today's market. Here's the problem with looking at it like that. You have park-owned homes here. The lot rents are significantly below market. Market here is about $450 a month. This is in Winston-Salem, right outside of town. So let's just say $450 a month just to keep this simple for the sake of this video. Guys, trust me on this. So if lot rents should be $450 a month, and now we have 12 lot renters and 24 park-owned homes, and those park-owned homes are charging $600 a month, you are losing so much in value by attributing these park-owned homes as park-owned homes instead of literally just giving the homes away to the tenants and bringing in $450 a month in lot rent. So a lot of people were pushing back when I mentioned this plan. And so that down here in Florida, which is a much more aggressive market than North Carolina, this is commonplace. People will give homes away and lose money on the homes, but it's because the price per pad and the lot rents are so high. When someone's charging $700 a home, and it's a park-owned home, and they can't be financed, and then you can go in there, buy it, and just give the home away for $700 lot rents, the park will become significantly more valuable. And this deal is one of those that could have worked this exact same way. When these park-owned homes are bringing in 600 total, 363 plus, that's a pro forma on that, 363 plus around 250. So you're looking at about $600 a month. That's that extra $150 a month in rental income is not providing any value to the park. And like I said, you could just give these homes away. And a lot of people were pushing back that, oh, you can't raise rents $200 day one. That's crazy. And what was shocking to me was, because I see this happen a lot, like I was saying in Florida, is that you're telling me you can't raise raise rents $200, but we're not talking about raising rents. We're talking about you give the home away to the tenant and maybe making an RTO payment that matches their same thing, and just set the lot rents to $450. Like, it's not a rental increase if they're paying the same or less and they got something for free, versus before where they're paying $600 a month and they get nothing for free. So like, this whole idea of we need to only, or the bank's only going to finance lot rents, if you present this plan to a lender, I'm willing to bet they're going to bite, because the income is there. It's not like this is some dilapidated vacant park. The income is there. So give the homes to the tenants, or sell it to them extremely cheap, make them do like a rent to own payment for a couple years at that $250 spread if you're really obsessed with that actual cash flow of it. But now your rents are effectively lot rental income that a lender will like. So when you guys are looking at these deals, then my whole point of this video is, don't be so obsessed with, oh, I can only look at the lot rents, I can only look at the lot rents. If the park is more valuable because it's park-owned homes, and you could either just give or sell those homes off, and in exchange to get the lot rents to market, but their total monthly rent payment is the same or less than it was before, that is not a rental increase on the tenant. That is just a reallocation of income so you can maximize value on your property. This is what a lot of people get wrong, and I'm seeing this a lot. And a lot of the properties that I market, it's like, it's overpriced. And like, you guys could cry about it being overpriced all you want, but I will keep getting them under contract, and we will keep getting them closed, because what might be too big of an increase for you, it's not a rental increase. Yes, if this was all lot rents, and I was saying, oh, just hike them up to lot rent, market lot rents, $450 day one, so $200 rent increase day one. Yes, that does not work. That is going to piss off all your tenants. That is going to get legislation involved. You're going to lose tenants, great tenants maybe. Some people do it. I'll be honest, guys. Some people do that. I don't agree with it. Yeah, you don't want to do that. But if they're already paying the money, it's just changing the income around. You're not doing anything. They're still paying the same amount. You're just reallocating it. So think that through. Next time you guys are looking at a deal with park-owned homes, think to yourself, if I underwrote this a few different ways, and now these park-owned homes, would the park be more valuable if I just gave the homes to the tenants, just made it lot rents day one? And then boom, there's your plan to either talk to that seller, get them to do it, or talk to your lender and tell them what you plan to do. Hope this video was helpful. If you guys want a free evaluation and you'd like me to underwrite your park in multiple different scenarios, free mhpvalue.com/valuation, or just mhpvalue.com. You will see, get your free evaluation pretty much everywhere, and happy to help you out any way that I can. Thank you guys for watching. See you in the next video.